If you just passed $100,000 in revenue this year, congratulations. However, you also just walked into a new tax territory that most business owners don't see coming until it's too late. So everything I'm about to show you in this video exists because of one thing. I see it far too often. I've seen it too many times where young entrepreneurs finally break through. They finally have that successful year, but then they're blindsided by a huge tax bill that just throws everything off the rails. And I've ultimately even seen it jeopardize their business. So today's video, I'm gonna show you the exact steps that I would take in the next 30 days if I were you and just crossed over $100,000 in revenue in my business for the first time. So without further ado, let's get into it. So to get us started, the first thing I would do is get my books in order. Now, this sounds like a boring task and it sounds like just admin work, but let me be careful when I say this, that this is one of the most foundational and crucial steps in your entire financial side of your business. Bookkeeping serves as the backbone behind everything that we do. So think of it like a ship. If you're on a boat and you're steering towards somewhere, you won't know that you're off course if you don't have a navigator, if you don't have something directing you in the right direction, right? And so it's the same thing with bookkeeping. It keeps us in the right lane and keeps us headed towards the right direction because we have a clear picture of what's going on. And so why do we do it? We want to know exactly where we stand. That's crucial with tax planning and overall knowing where we're gonna be from a tax planning perspective between how much we owe and how much we're taking advantage of opportunities to lower that taxable income. And as I just kind of hinted on, it gives us a clean record of what's going on and gives us a clean record going forward so that we catch everything coming into the business. And what this means is it gives us opportunities and it gives us the opportunity to identify all of the tax deductions and tax strategies that we're already using and the ones that we're not utilizing that could be playing to our benefit. But a crucial thing, knowing where you stand right now doesn't exactly tell you where you'll be come December. And that's why we have to take the next step in order to get that. And so now the second thing that we're going to do is we're going to be running a mid-year tax projection. And so in order to do this, what we need is a profit and loss. And because we have our bookkeeping set up, we're able to have our current numbers and organize them in our software or by hand in order to get our revenue minus our expenses to get to our net income, because that's ultimately what we're gonna be taxed on. And so then what you're gonna do is you're gonna take that number and you're gonna plug it into the IRS tax tables here on the right side. And as you can see, you just would line it up. So in this situation, 15,800, obviously much lower than you in this situation. Yours would be up above this 100. You can see where your rough tax rate will be. Now it's important to know that this isn't the exact number that you will be taxed on, as it's a progressive tax system, but that's outside of the scale of this video. And so this is a screenshot from the actual IRS tax website. But what you also can do is, here's the link right here below, and if you want to go look at it yourself. And so now you might be asking yourself, okay, why are we doing this in July? Why do we need to know this mid-year? And the reason for that is because if we do it before December, we still have time to adjust. So if we do this profit and loss and we see through the tax rates that we're gonna be owing a huge number, we still have time to implement strategies and put things in place to actually negate and offset that taxable income throughout the rest of the year. And so once you've actually got that number and you know roughly what you're gonna be owing in taxes, the next question is obvious. So what the heck do I do with it? And so that leads us into our next step. So the third thing that we're gonna be doing is we're going to be making quarterly payments according to our safe harbor. Now that sounds like a fancy tax term, but I promise it's much simpler than it seems. And so quarterly payments essentially are, the IRS runs a pay-as-you-go system, right? So it's not just you make all this money and then at the end of the year you owe a tax bill. The IRS actually wants you to pay throughout the year based on what you're earning. And this is a huge blind spot in a lot of business owners that I see, and they get penalized for it. And so essentially as you're going, you have to make your payments according to the safe harbor rules. And the safe harbor is essentially the minimum amount that you are required to pay to not get penalized. And so for your safe harbor, if you're in this situation, what you're gonna be wanting to pay is actually either 90% of what you're gonna be estimated to owe by the end of the year this year, or 100% of what you owed last year. Now, as your income grows, it ends up being 110% that they expect, but at $100,000, you're not required to do that. And so with our projection number from step 2, once again, that we got a minute ago, we know what we need to be paying. It's either gonna be 90% of that number or 100% of last year's number. And once again, it's the floor that you have to pay, and you can choose the lesser of the two. And so now we have our total number that we know we're gonna owe. We have our total number that we know that we have to pay, but that still bears the question of where the heck does this money come from? And so that leads us into our next step, step number 4. So step 4 is to open a dedicated tax savings account. This is something I stress a lot to my clients because we've seen it so many times that we finally get the numbers, but then we don't have anywhere to pull the money from. We either don't have it on hand because it's tied up in other things or running the business, but we don't want to get penalized and owe extra money on top of what we already will owe. And so what I recommend with all the people I work with is to set up an auto draw from your revenue that you make to pool to a dedicated tax savings account. And the recommended amount that I normally say is around 20 to 25% of your revenue. At the current level where we're dealing with $100,000 net income, 20% typically will work and you'll be safe in that situation. Once again though, it's important to note that this is just a recommended number. As your income grows or as maybe you start hitting a rough patch, that can go up and down depending on the situation. But overall, it's good to just set up an account that'll auto draw that 20% of your revenue automatically. So it's just set and forget, you don't have to worry about it. And so now we kind of know all of the steps in place that you would kind of need to know, but that still leaves a bit of a hole. And the reason for that is that at this stage, yes, you can do it all by yourself, but as your business grows, it becomes a little bit harder to handle and it becomes a little bit of a headache for you as the business owner. And that's the reason that I left this one for last. So as I mentioned, early on, it's manageable. You can handle it yourself. It's not that big of a headache. But eventually as your business grows, the situation becomes more complex and you're gonna want to offload it to somebody else. And so that's why step 5 is to find the right tax professional. And so a tax professional or accountant or CPA, all those different words for this, gets a little vague and you might not know what to actually look for. So I wanted to define that so that you could actually know what to look for when you're dealing with different accountants and different people trying to be the accountant for your business. And so the first quality to look for is responsive year-round, not just during filing time. The purpose of a tax professional that you're gonna be paying good money for is to have them in your corner. So think of a boxer. A boxing coach would be in his corner the entire fight, telling him what to do, giving him hints, giving him tips on how to win the fight. That's exactly the purpose of a tax professional. You want them in your corner year-round, not just when it's time to file the return. And the second thing is they're actively finding you deductions. This means they're coming to you with, hey, we should try this. Hey, would this be something you're interested in? I think it could offset your income. And the reason for this is you don't want somebody passive that just takes your numbers and files the return. You want them working hand in hand with you, actively suggesting things and helping you. Because I mean, for heaven's sakes, they're the tax professional, they're the accountant. This is their industry, this is their expertise. They should be bringing this stuff to you to make your life easier and your life better and ultimately your business more successful. And the fourth thing is they know the why behind everything they're doing. They're not just telling you what to do. They know your specific industry. They know why this works for your industry and why you should be pursuing this avenue. It's one thing to give generic advice and just tell people what to do, but it's a whole nother thing if you can back it up and tell them the reason why they should be doing all of the things that you're suggesting. And the fourth one, and this is one that I've had to learn personally, is they're willing to tell you no. Sometimes business owners, and I love y'all for this, get a little over antsy about different strategies that you hear online, things like that. A good tax professional is going to be willing to say no to things that are going to increase your audit risk, or the financial benefit does not outweigh the cost or time and effort put in to actually get the strategy in place. And so those are the qualities I would look for if I were y'all. But if you're not sure where to start, I would suggest looking at the Main Street Tax Professional Network. This is actually where I was trained under. It's one of the top tax attorneys in the country, as well as a great community of like-minded tax professionals. I don't get paid for saying this. This is just me genuinely trying to help y'all. It's a great group of professional advisors that are all very aggressive in what they're trying to do for their clients, but also remaining within the laws and remaining reasonable and very conscientious of their clients' lifestyles. So if you're not sure where to start, Main Street Tax Pro Advisor Network, the link is right there below. type that in, find who works best for you. There's people all over the country that you can work with you. And so none of these things are complicated on their own, right? Clean books, making a tax projection, setting up quarterly payments out of a dedicated tax account, and eventually finding a tax professional to help you on your journey. None of it's overly complicated, but what's actually difficult is doing it now before the tax bill shows up and actually putting things in place and getting momentum going on your tax plan. So here's the exact next steps that I would recommend to you. So congrats on the success. We're not trying to take away from that. That's a huge achievement and you should be proud of yourself. But here's what I would recommend doing next. So down below in the description, you can get a free tax deduction checklist. What this will do is it'll give you specific deductions that you could use in your industry and apply to your business now. But also once you start looking for an advisor or start looking through your P&L, make sure that you're taking advantage of these types of things to lower your taxable income. And also, if you're ready, you can go ahead and book a discovery call directly with me, and I'll tell you what your next best steps are. And we can talk about the possibility of me helping you out on your business journey and helping you save as much money on taxes as possible. So I hope you found this video helpful. And if you have any questions, please leave comments down below. I'm always here to answer any questions that can help you be a more successful entrepreneur, as that's my ultimate goal in everything I'm doing. So I hope you enjoyed the video. Be sure to subscribe. More tax content coming here in the future to help you on your entrepreneurial journey. And as always, never stop your relentless pursuit of continuous improvement. And I'll look forward to us talking again soon.